Thank you very much for the lovely introduction. Hello, everybody. Yes, we will talk about investments and Web3, and of course, I cannot do it myself without my great panelists. I would like to invite to the stage Mihov, Valentin Mihov, sorry, and Alex with a long last name, just Alex, please. I'm sorry. Yeah, thank you for joining. I hope that everybody are back after lunch. Maybe we'll wait for the others just to sit. We're trying to figure out this investment domain within Web3, within blockchain and everything that is related, because it's a bit different. And it demands both from the investors and from the, the companies and the entrepreneurs and so on to think a bit different and to present maybe what they're doing in a bit different. So my first question that I would like to ask you guys is about the challenges that we're moving from Web 2 kind of developments, from developing an established company with a known team, with a location and office. Sometimes we'll have to make a Web 3 kind of investment into a DAO, which is a decentralized team with other challenges. So a bit about the challenge that you see from your side for investing in this kind of businesses.
Yeah, thanks for the question. Basically, from investment perspective, the challenges are all and the same always when we talk about tech investment. And probably the biggest challenge here is to really get on the technical side and to see how this project differentiates technically, because we as an institutional investor, we have a very well thought investment process, right? So we are always giving priority to fundamentals, and we always like to see some sort of a product market fit, validation from the market, from the customers. But generally with the new technology, be it like back in 2000s with the internet, with the cloud era, afterwards with fintech or other different verticals, the technical side is very specific, and obviously we cannot be experts in any technology, and that's where we usually use different external technical expertise just to validate the technical side. But what's interesting, and it's kind of funny, just if I can give an example here, like 4 or 5 years ago, we used to receive pitch decks, and we used to have startups that are pitching with no product, no launch or something like that, at very early stage. And nowadays with crypto and Web3, we are more and more seeing that startups are sending us pitch decks with no product, no launch, and no team. All right, so on a no-name basis or anonymous, and so
like a 2 slides presentation that
exactly
with a vision.
You don't know who you're communicating with, the correspondence behind, and that's the time when you know that you're kind of moving away from fundamentals, and you should stick to it.
Yeah, so I think a couple of aspects of this question. So first will be the administrative aspects, right? If you are institutional funds and you need to sign papers with someone, that could be a challenge with a DAO or with anonymous team. Now, because my group, we are not institutional type, I imagine that this is a challenge for institutional funds, and there's something that they need to figure out. But for us, that's actually not a problem. It's not a problem for us because as angel investors to invest into an anonymous team or just do an investment through a multisig. What's the challenge with anonymous teams is that you need to build some kind of a trust that these people are really going to execute this product. Now, I would say that anonymous teams actually make a lot of sense in some cases. For example, if we talk about privacy-preserving protocols, actually it makes a lot of sense for the founders to be anonymous, and we see right now with the Tornado Cash situation why that's actually very important. And in some other cases, that's also important. But the thing is, you actually make calls with these people. You just don't make video calls. You know how they're voice sounds and all this. Maybe you meet them in person, like on a conference, but you don't know their real name. So, I mean, it's kind of strange, but it's possible. What I would say is that most of the deals that we do are not with anonymous teams. And for us, it's much easier to build trust if we know that these people, for example, have experience in the product, in the type of product that they want to build, not just some. For example, we get people building games that don't have any gaming experience, and that's a big red flag, because in many cases, that's really needed.
So basically having no team or decentralized team or fake name and no office, it's not an obstacle.
Yeah, it's not an obstacle. It's very important what is the idea, what is the product, and then when you do the calls with these people to actually build trust that they actually understand the domain and they'll be really executing that, and what is the incentives, like are the incentives actually aligned? And is this product going to be successful? That's the ultimate thing. Because if it's an anonymous team and they really have a great idea about some DeFi protocol, I mean, sure. I mean, if they really execute it and the protocol is successful, they're going to be financially rewarded. So the incentives are kind of aligned. So yeah, I think it's not a problem.
How many from the crowd are people that are basically looking for investment or will look for investment very soon? Just raise your hand. Okay, so we hope that we will show more value. Please, what do you say?
I was just thinking that it's really something new and it's very interesting because this VC mantra for 20, 30 years even more. The three most important things are market, product, and team, right? And now with crypto and Web3, all of a sudden, all of these three are kind of missing of the equation.
Yeah, talking about finance, that part of the due diligence used to be financial due diligence, to see the numbers and to see the bank account and to talk to the accountants. And when that with this kind of teams, they don't really have an accountant and there is no bank account and there is some wallet somewhere with some funds and so on. Yeah, so that's one of the advantages, one of the things that need to be taken care of when we're moving from Web 2 to Web 3. And also in Web 3, it's a big word. Blockchain is a big word. There are so many subdomains. And my next interest is to understand what kind of niche within Web 3. It can be AI or VR or AR, augmented reality, or maybe things like NFT platforms. What kind of niche within this big space is interest you as investors these days?
Well, if you ask this question in our group, you're probably gonna get different answers depending on who you ask, because different people have different interests. For me personally, I would say GameFi is interesting because I really believe that the current closed gaming economies could benefit a lot from being open, more open, not so walled as like Steam stores and all that. I think that makes a lot of sense, but there is a lot of challenges how to actually make this work. And it's not just about putting the in-game items as NFTs. It's much more complicated than that. And initially I thought that this is going to be disrupted by people that understand blockchain. And the more I observe the market and I see the teams, I see that most probably it's going to be disrupted by people from the gaming industry. That they actually understand how gaming industry works, how the users of games work, and then they can adjust the currently existing closed economies to be more open. And I see teams actually executing on that. So that's really exciting for me. Another one that I'm a strong believer is DeFi, and we already see the traction with that. I think it's no question that DeFi is going to disrupt the financial world, and more awesome stuff is coming up. And regarding NFTs, I kind of believe that real-world assets and tokenization of real-world assets will be a huge thing. And personally, I see this already happening in real estate with some projects, and I just see the value into it because, as a user of it, I actually see the value. And I think we're going to see more and more out of that. So that would be the three things that excites me.
So basically, it's one person with many answers.
Yeah. Yeah.
But you have, in your team, you have like a roadmap that you're investing according to, or whatever comes within this space which looks interesting, you jump on it.
Yeah. So we don't have a particular conviction or thesis that we're going to invest only in that. Everything that is blockchain and is looking interesting is interesting for us. Now, we have some people, for example, that say they're not going to invest in gambling because they believe that gambling is bad, so it's off the table for them. So there will be like considerations like this. But yeah, I can't say that we have a conviction that this is only going to be that. It needs to be just blockchain.
Yeah, so the question was about
the fact that Web3 is so wide and so many opportunities, and if you have like a guideline or a roadmap that you invest in specific things, or what interests you as investors within this big space?
Yeah. Yeah, there's several vertical trends within Web3 that are, kind of taking off or accelerating already. DeFi, as Valentin mentioned, gaming is transformed quite a lot. Real estate, maybe. These are kind of can change from year to year, from period to period, I think. And as an institutional investor, we can also participate in some of these trends, we believe most, but we are not like 100% blockchain dedicated fund, right? So blockchain is one of our strategic verticals, but we also invest in other Web2, let's say, verticals. But what we believe will turn out to be quite profitable for especially institutional investors are trends that are kind of horizontally applied in different verticals like DeFi, GameFi, and so on. And this can be like in-app wallets, security, communication tools, that kind of stuff that have more general application, and regardless of which vertical is going to be most popular tomorrow or after 5 years, they will have application there.
By the way, talking about gambling and gaming and gamify and such opportunities, the traditional gaming industry is getting closer more and more into blockchain and adopting blockchain solutions, and we see it in our job a lot. And from the other side, the blockchain gaming side of the business, they are looking for the values that are in the gaming industry in terms of acquisition and retention and things that was done in the traditional market for many years, and these two markets are kind of merging slowly within spaces like metaverse and NFT and so on. So this is one of the verticals that I think, as an investor myself, are going to be the most exciting, because even without the gaming experience itself, if we're talking about metaverse experience, the value that are looking for are basically game developers. So this is like the transition between Web 2 to Web 3. And we know ourselves, and most of you also know, that blockchain and crypto have some relations, but not really rely on each other, and two different domains. But we feel in the investment field that when the bear market is going down and the bull market is going up, it does affect the ecosystem. And I would like to ask you guys about how do you feel when the market is going up and down, in terms of your will to invest and the interest to invest, and also from your portfolio about their enthusiastic when the market is going up and down.
So during bull market, you feel a lot of FOMO, because you see like a lot of companies raising money, and you see like big funds pouring in money, and you're like, okay, I'm missing out on that. So that's really bad, I think, for the investors generally. So during bull market, it's good for companies to raise money. It's bad for investors to invest. That's usually how it goes.
Wait, say it again, because I think that some need to write it down.
Yeah, so during bull market, it's good for companies to raise money, because the valuations are very high, and there's a lot of money on the market, very easy to get. But it's very bad for investors, because they pay much higher price, and they feel a lot of FOMO. And generally, there is much more noise, much more like people that just want to raise money but can't really execute on the ideas. During bull market, it's the other way around. During bear market, it's the other way around. So investors are much more picky about what they're going to invest in. There is much less companies raising during that time, because there is less noise. There is less teams that are lacking conviction. Like bear market really sifts out all the teams that will be there even during the hard times. because it's very easy to build during bull market, so to say, but during bear market, you really need to have the conviction, and that's super, super important. So what I see personally is that, you know, some of the investments that we did during the bull market right now are just failing because the team doesn't have enough conviction to continue building during bad times. So as an investor, it's much better to invest during bear market, and I mean, it's kind of hard because, you know, the FOMO during the bull market and all that. So that's like from my personal experience during this cycle while I was an investor.
Yeah, I fully support this thesis, even from our experience. Like the first 2 years of our investment period, we kind of focused on different verticals just for that reason that we saw huge speculative, you know, asset bubble in blockchain. We like blockchain, we like the space, but it was not time to invest in blockchain for an institutional investor like us.
When was it? Which years?
The past couple of years.
Oh,
yeah.
Okay. No, yeah, because 2017 and 2018 was totally different.
Yes, but I mean, NV3 is vintage year, like 2019, 2020.
Okay.
Right? So, yeah, we invest since 2020 with this vehicle. Yeah, basically what I was about to say is that right now we are quite focused on the blockchain vertical, just because we see that many of the speculative projects are wiped out by the bear market, and the projects that are left in the market are those that really have strong teams, and teams that are really convinced to kind of be the leaders in a space or in a vertical once the tide turns again. And this is the time for an institutional investor like us to kind of strengthen the portfolio in a specific vertical. And the sole reason that we have 5-year investment period is actually quite good, because we can actually turn our strategy differently depending on the cycle and where we stand in this cycle. So we think that right now is a good time to invest in blockchain projects.
Good time to invest in blockchain. So all the guys with the hands up, catch these guys after the panel. When a traditional investor is coming and see the blockchain or DeFi or DAO project for the first time, he has a lot of learning curve, like you said at the beginning, in order to understand the project and to understand the market and the potential and so on, unlike if the investor is coming from the blockchain side. And I would like to ask you guys about how interest is for the investors that are coming from outside of the blockchain to actually use blockchain and crypto-related tools and capabilities in order to evaluate and to make the investment. For example, should these investors that are coming, I don't know, from real estate or stock market into the blockchain, should they make the investment into this small DAO with crypto specifically? Should they need to know Chainalysis as a tool in order to audit the wallets of this entrepreneur? Or it's not relevant and it's just, put some money and let us work?
Well, I think for such an investor, it's very difficult to kind of assess the technology and the competitive advantage that it has. Ideally, they team up with other group of people where they share different knowledge bases, right? And they can exchange different experience and make up a solid decision based on that. My experience is that these type of people are very difficult to convince to invest large amount of money in such innovative projects if they don't understand
because of
the
this
base.
knowledge gap.
Yes.
Yeah, so our collective, we are all native blockchain users, and I think that helps a lot. Like, teams see that and they value that a lot. In that sense, if we talk about angel investing, because funds it's a bit different there. When you get an investment from a fund, usually you expect from them to get like networking and access to other funds and all that. With angel investments, for the companies, what they get out of them is people with some expertise that could potentially help them out while building the product. So it's very important that you get people that actually understand how the technology works. And we see that, when we make calls with teams and they see that we are actually DeFi users or like being in blockchain for a long time, they really value that, and they want to onboard us. So in that sense, it's hard for me to see why a team is going to raise money from someone that, like, it's not a fund, like an angel investor who is not like a native user or like doesn't understand the technology and all that. Because money is the cheap part usually. When you get investments, you don't actually get only money. You want to get more out of this. And the question is what you get more out of this person. So that's something that I think it's important for teams to think. Like when they raise money, what do you get that is more than money out of this investor?
So basically, if the investor is coming from the blockchain space with the knowledge, with some network, with portfolio that you've done before, it's a big value for the team to take this money and not just dump money from others.
Yes. And if you see teams getting money from like completely random people, that actually are a red flag, because that means that they couldn't convince the native people, the people that really understand the space to invest in them.
That's a good point. I think that we're kind of out of time. Maybe we have some time for questions. Absolutely. So if someone from the looking for investment would like to ask something, or maybe we have some investors that would like to enlighten us with their point of view or their strategy toward blockchain investments. Yes? Just please say your name and where you work for.
I work for Kudos. It's a British cloud blockchain united company. But I'm not asking for money in this case. I heard the word fundamentals mentioned a couple of times, and I just wanted to get a little bit more detail on that. What fundamentals exactly are you looking at with making an investment decision?
I can say from my point of view, first is about the team. So if I'm talking to Mark on Zoom with no camera, and obviously it's not really Mark, I don't feel like investing in these guys. For me, it's a kind of a red flag. I need to see the guys in the eyes. I'll be happy to meet them in person and have a dinner or some discussions in order to feel the person. So for me, it's first about the team.
Yeah, definitely. I 100% agree with you. I just can add to this that it's the team, and it's also, fundamentals. I'm speaking, what's the problem that you're solving, and the way that you're solving it, how scalable it is. And if I have to relate to Web3 and crypto, and if there are some tokenomics inside, at the more advanced stage, we also look at what's the tokenomics, and is it tokenomics or Ponzinomics, right? So that's very important for the project.
Yeah, I would agree that the team is the most important thing, especially in early stage deals. Because when it's very early project, like without really a product still launched and all that, it's not a lot that you can assess. Then what is the problem that they solve, and is this actually a problem looking is this a solution looking for a problem? Because many teams sometimes just build something that they're looking for a problem. So is it like a true problem that needs to be solved? And also, how scalable is this problem? Like, is this a market that's going to scale a lot? And as an example, I would say, like, okay, you invest in some NFT, marketplace. So the question is, are NFTs going to explode, right? Is this going to be a big market? So if you don't have a conviction that this is going to be a big market, you shouldn't be investing into that. So yeah, I would say these are probably the biggest ones.
Okay, thank you very much. I appreciate your answers. And still, I think a little bit more specificity on what exactly in the team. Again, looking for a problem market fit, that's again quite a generic answer. We all understand that. A little bit more specificity would be greatly appreciated from an investor perspective, I think.
Yep. Yeah, if I can take this one, because based on my experience with successful startups and startups that actually failed, you know, the core, the main differentiator is the team, right? And not the expertise of the team, but how resilient the team is actually. And in the end, for us investors, okay, we would like to see that the team has experience in the field, in the vertical, that probably they manage to scale teams, they manage to scale businesses. But what's most important, it comes down to psychology most of the time, is how resilient these founders are. Because I can guarantee you that down the road they are going to face difficult problems, and you know, they have to be agile, they have to be resilient, and they should have grit in order to move on. And if we don't see this, definitely going to pass on this project, regardless of how good the idea is.
So the way, yeah, I completely agree with that. So if we need to go like even more specific than this, like how do we identify these people, right? So one thing is, if you see a lot of negativity into them, that's a red flag. Like if they kind of trash on a lot of stuff, that's a red flag. Because it means that like they, from my experience, you know, very, very negative people will maybe pivot too soon, or will start to trash on what they're building because it doesn't go their way or something.
It falls a lot into psychology profiling of the person. Eventually, you give these guys your money, and you want to feel comfortable with the way that they handle the money and the way that they handle the business, and you want to feel comfortable when you're working with them. And like you said, if the guys are negative or they've done some, you know, thing that you don't like as a person, you don't feel like investing, even if the opportunity maybe it's amazing. You said to yourself, maybe I just give up in order not to go into these troubles and just let it go.
Sometimes it's really about gut feeling, you know, I just don't like this guy because something, and you try to rationalize it some way, and you know, it's usually comes down to really like yeah, I mean, in many cases I think that's a very actually a good rule. But yeah, also it depends, like you need to assess whether they know their stuff. If you see that they're not very deep in this topic, this is also a red flag. Like they really need to know, I think they need to surprise you with their knowledge about stuff. Like they tell you stuff that you didn't know before that, because that means that they're like true experts into this thing. Also, if they talk too much about the price, that's also a red flag. Like if they concentrate really, like, for example, we had this talk with a founder, and that was like a huge red flag. Like, what is your end goal with this project? And he says like, well, the token price gets $20. Like, come on, what is that goal? Like, this is bullshit. So that's also a big red flag. Yeah, like these are the ones that kind of come to my mind.
How much you care about the team being dedicated 100% to this project, or also involved and dealing with other related, let's say, companies?
Yeah, that's also very important. Like if you see that they're actually working on like 2 things or 3 things at the same time, that's also a big red flag, because in order to build a successful business, you need to be like 100% dedicated to this, like 200% dedicated. Like it doesn't work if you just have, oh, I built this successful company here, and now I'm starting this new project, but you know, half of the time I'm going to work on this other thing, and you know, they're gonna cooperate between them and all this, but you know, actually you're kind of hedging your risk this way. Like if this is not successful, I'm going to just continue to do this like successful business. But what's gonna happen is that the moment when this thing starts to like be in one place and doesn't work, then you're gonna give up because you have this nice business here that you can concentrate on. So that's actually very, very important.
Thanks. Anything else?
Yeah, one quick question on my side. Previously, I know that VCs were mostly interested in investing in infrastructure projects and not in dApps, decentralized applications. Like, which one do you prefer of those two? And has anything changed since this bear market started? And yeah, we saw a lot of dApps dying. Infrastructure projects are not doing that well. I mean, layer ones primarily, I would say, because those were the sweethearts of a lot of VCs. So, are you investing in dApps or you prefer infrastructure?
I think that the fact that a lot of dApps are dying, or many of them are dying in the bear market, just says something about the dApps. So maybe there are like a solution without a problem, or just riding the hype or something in the last bull market and not really solving something or bring some value. For me personally, DApp is still interesting, specifically in the gaming space, and DAO, like we said before, is not an obstacle. It just says something about the entrepreneurs themselves.
Generally, infrastructure is much sweeter because it's much easier to understand how it's going to scale. Like, if this is something that a lot of projects gonna use, like, yeah, sure. Now, yeah, we see that it's not always the case, but here I think, for example, for layer ones, I think you need to think like, what is your thesis on scaling of blockchain? For example, for me, I believe that scaling is going to happen through layer 2, not by shipping a bunch of layer 1s. So in that sense, it will be very hard to convince me that to invest in a layer 1, because this is just not my conviction, and I mean I have my reasons for that. But if we talk about games, let's say, so it's one thing to invest in a company that's gonna build infrastructure for building games. It's another to invest into a particular game. Because games are very hit driven, so it's going to either be super successful or you're just going to die. So it's much better to invest into infrastructure for gaming than to particular games. Now, there could be exceptions for that. Let's say you see a team that's like super stellar team that managed to ship a lot of successful games. Then things kind of tilt into a direction where, okay, maybe it makes sense to invest into that particular game because these people, they know what they're doing. But generally, infrastructure, for me personally, it will be always better than particular projects. And in many cases, these dApps, they actually provide infrastructure. If you have a dApp that allows you to do DeFi, I don't know, like long and short NFTs or do loans, this is a type of infrastructure because it can be used by other dApps on top of it. So this is also very interesting.
Yeah, I agree with this. It's much harder to guess which DApp is going to achieve best results in which vertical and whatsoever. Like what I was saying previously about horizontal solutions and vertical trends, it applies 100% to dApps as well. It's from a risk management perspective, infrastructure is way higher bet, so to say, and it provides still quite a lot of upside potential. So I don't know, if we compare it infrastructure versus dApps, I think the answer is obvious.
Okay, guys, we're done with our session. Thank you very much for participating. Thank you very much for listening. If you want to go outside, we can invest and continue these discussions and continue. Have a